Bad is getting worse and worse is getting horrible. How are you holding breath in this kind of a market?
Well, I think what one requires is just pure sheer patience right now, because clearly the sentiment has turned pretty much negative, and that's how sentiments do turn. And if you really look at it right now, the concerns are more to do with a lot of the global macros, and then of course some of the challenges we face back home. And it's less to do in a way with valuations and earnings, especially at this point of the market. So I think right now the sentiment is clearly decisively negative, and I think at this stage one should just probably be a little more patient than what one has been in the past.
Time to take a very conscious and a careful approach, Nilesh, that the easy money is being made, the sentiment has taken a whack. Yes, in the long term markets will bounce back, but in the short term you need to be cognizant, careful, watchful, and protect your capital, because what is looking like a cut and what is looking like a crack soon could snowball into a crash.
Yeah, I mean, Nikunj, there's really no doubt about that. I think clearly in the short term, the bias continues to be downwards, and I think this could remain for a few more weeks or a few more months. There will surely be pullbacks and that kind of stuff, but basically there is going to be a lot of resistance on the way up. And if at all, I think I wouldn't be surprised if over the next 2 months, 3 months, we are still down even from where we are today. And we have to keep in mind that the Nifty was at 10,000 in sometime at the start of the year or somewhere during the middle of the year, and those are levels which can kind of definitely come over the course of next few months. So I think at this stage, I think yes, there is a lot of negative news flow out there, a lot of macro challenges, a lot of headwinds, and that will surely create some impact. But I think right now, if one is got some liquidity, it's more prudent to kind of just be sitting on that liquidity and look for a better price point to really kind of deploy that liquidity.
Nilesh, morning, but what is the biggest niggling factor? When you wake up in the morning, what is that data point that you look at? Do you look at global markets? Do you look at crude levels? Do you look at the rupee closing the day before? Or do you just worry about this rising interest rate scenario and what it's doing to NBFCs and financials and rate sensitives at large?
Well, clearly the two most variables, currency I think is more an outcome of various developments. But it's clearly, I think, number one is crude oil, because crude now is really got into a dangerous territory. I think it's crossed some very critical thresholds. So clearly crude is really the biggest variable that one really kind of gets concerned about. And second is, of course, the developments pertaining to ILFS and its impact on the money markets and all of that. I think these two are really the big developments. Crude is something which is in a way become an uncontrollable, so to say, whereas ILFS, hopefully there will be some solution to it over the next few days or over the next few weeks. So I think these two are the biggest, in a way, the variables which one really watches out for on a daily basis.
Nilesh, you were talking about, being patient in this market, because I guess there's not much that you can really do. And that's a virtue you really got to have as an investor. But what is it that you worry about? How much more the market is going to fall from here? I mean, do you capital protect now? Do you even book out of IT and pharma names? Or do you worry about when the market rebounds, where is that new leadership pattern going to emerge?
Yeah, so I think that's a pretty interesting discussion, because I think clearly what it looks like right now is that we could still see kind of a 5 to 10% downside. And I think that could happen at the index level or the broad market indices or even in a set of stocks. So clearly, I think right now it would be safe to assume that there is still a 5 to 10% kind of a downside. IT, pharma have been the relative strong pockets or the strongest of forts in this correction. And obviously, of course, they stand to gain significantly given where the rupee dollar number is. I mean, at 73, 74 rupees to a dollar, I think it's in a way a kind of a windfall for all exporters. But I think when there is a correction of this kind of magnitude, finally even the last kind of citadels or the last forts also kind of crumble. And that's something which will happen with IT and pharma. May not be to the extent that we have seen with financials or consumers or other set of sectors, but clearly even IT and pharma will decline post this towards the fag end of this correction. So I think when you start to see IT and pharma in a way starting to crack, you could probably say that you're probably somewhere closer to the end, if not the end. In terms of what could really play out going forward, see, I think clearly we have no choice but to revive the investment cycle. And I know this sounds a little contrarian in this kind of current environment, but we have no choice to kind of really revive the investment cycle, the capex cycle. And that's going to be key, because till we don't revive that, it's hard for India to sustain that 7 to 8% growth rate. So I'd probably think that at some point of time, there would be some positive policy intervention which really kickstarts the investment cycle. And I think therefore in that kind of a context, maybe sectors like cement or capital goods or engineering, that's the entire pack where I think the next round of leadership will really assume. Of course, financials, consumer, which are going to get beaten down, will also kind of from the lows give you a solid absolute returns. And they're of course India's secular growth stories, and there's really no taking away that point. But maybe, for maybe with a 2 to 3 year perspective, maybe sectors to do with the core economy probably have a better chance of outperformance versus the conventional favorites.